Back in January, we hosted an event to which we invited 200 of our closest industry friends, and with them we shared our predictions for the housing market in 2025.
And then something happened. What was it? Oh yeah, the White House threw the global economy into a frenzy with tariff threats, tariff implementations, 30-day pauses, 90-day pauses, among other things.
So it's a really difficult time to be a forecaster, but it does beg the question, how did we fare with our predictions halfway through this year and against the backdrop of tremendous economic uncertainty?
On some, we're way off. Others, we're pretty well on track. So let's take stock and jump in.
Let's start with home prices. Despite really low sales counts, which you're going to talk more about in a moment, and a 13-year high in inventory, the benchmark condo price through this year to date has basically been flat. Rental rates, on the other hand, haven't held up nearly as well, thanks to a lot of new supply coming on market and diminished demand because of the shift in the federal government's immigration policy, which saw BC lose population in Q1 for only the third time in its history.
On the sales front, home buyers have taken a big step back this year. The resale market saw some momentum heading into January, and then all the tariff shenanigans just killed consumer confidence. I do think April was the bottom of the market, and we've seen some marginal increases in sales since then, but we're still way off track of our prediction to get back to average. On the pre-sale side, our Q1 tally was the fewest transactions we've ever seen in this market, with data going back to 2012. And while we don't have the Q2 results in yet, we're tracking for a marginal increase in the second quarter and still really depressed sales count.
On the topic of housing construction, the good news is that so far our forecast of starts is pretty bang on. The bad news is our forecast of starts is pretty bang on because they're down 20% versus this time last year, and we expect that trend to continue over the coming few years. On the flip side, housing completions are up, but not by as much as we expected, so we'll be looking for that pace to pick up over the coming 6 months.
With inflation back to target, the Bank of Canada has lowered its policy rate back into its neutral range, but the economy isn't exactly humming along, and so we expect 1 to 2 more rate cuts through the balance of this year. The fixed mortgage rate picture is a lot murkier though. The bond market's been extremely volatile with the situation in the US, and so banks will have to weigh whether to price in a higher risk premium or whether they want to compete for the wave of mortgage renewals that's just getting going.
We'll see you in 6 months and let you know how we're doing then.